Hello, this is Mitch King, January 20th, Tuesday evening daily stock report from Trade Stocks America. Here's Wells Fargo again. This chart keeps getting better on the long side to buy. We see the exponential or parabolic curve decline, where you see that big curve, rounded curve, or you can call it a banana curve if you want, where it just curves right down like this, and the only place I'm looking for this thing is to bounce off like this, and that's what we're looking for. Another thing is that you see this increasing volume on these bars getting higher and higher. This whole sector is doing that. Let's take a look at a few other stocks, but boy, if you guys have any money and you haven't bought any financial stocks, I know I've been a couple days early on this sector. Wells Fargo would be a real good one. And let's take a look at another one that we haven't talked about, US Bank. The same pattern, we've got increasing volume, really looks good. A exponential drop in that. We're looking for a bounce that just pretty much slingshots up like maybe like a bungee cord, and looking like for that V bottom. So this is the left side of the V here, looking for this, just like we saw right in here. We saw it here in July, and those are the two best ones for this particular stock. Let's just keep going down the list of financials. Here's Deutsche Bank. You see all these little gap downs. It's just the nature of the way they trade, because they also trade in Germany. This is the same pattern that you got. We see this in Bank of America. Everyone's worried about their dividends going to be taken away, and it probably is, but I think the stock price is reflecting that. Here's Bank of America's at $5 today, and it was at $14 to $15 just 10 days ago. Citibank, same pattern. Goldman Sachs JP Morgan, another great looking chart. I just think this is a no-brainer on the long side for these money center banks that we talk about in the text, as well as what the few I've shown you here. I'd stick with something like US Bank or Wells Fargo, even a little Bank America. Citibank's got a little more problems, or a lot more problems than these other ones. So in that order, I'd go US Bank first and Wells Fargo. Here's Dow Jones. Took a 4% hit today, or 332 points right here. You know, we're clearly way below that trend line. You know, this is obviously a really negative looking chart. I don't see this as following this pattern anymore, where we had these nice little higher highs and higher lows. We were hoping that this would do that here, but obviously you can see the last 4 or 5 days it broke below that, and that's kind of why that trend line is drawn, so you can see if it drops below that, it's a pretty good discipline to sell out of it, because the trend pattern has changed. Nasdaq Composite looks about the same, maybe not quite as negative as the Dow, because the financials fill the New York Stock Exchange, and the Dow is heavily weighted toward the financials. The Nasdaq tends to be weighted toward technology stocks and a lot of these small cap stocks as well. Here's a little scan that you can use with the telechart. Over on the left, you can see I stuck here the industry groups that Morningstar uses, and I also told the sort by the price percentage change the last 5 days, and you got education and training services here, and that tends to happen in downtimes on the economy, where people go back to school and start taking these online classes from companies like this, Career Education. Here's another one, and these two are just a couple examples that are part of that education and training services sector right here. Gold's also been up the last week or so. Here's the mineral mining stocks. Here's diagnostic groups, which tends to be the biotechs. That's starting to get a little definitely stronger, but you can see this here. These percentages moves here are not very much, but this is in the last week. At least it's going up, and you're seeing these stocks go up on the upper right hand corner of your screen, right up in here. Just thought I'd show you another way to use the Warden Brothers telechart, which is really great, really good for the daily charting. Here's IYF, which is the financial sector ETF mutual fund. It's more diluted. It has a lot of different stocks in there. If you feel a little more comfortable of being diversified in this sector. You can buy the IYF, and that is right up here. I prefer personally to have an individual stock like the banks, and I'm telling you, this is one of the best opportunities that we've seen in the last 6-8 months. I think the first one, again, I think I'm being redundant here,